So if we did get above 30,000 and we stay there for, let's say, a week or so and establish ourselves back above that level, I think at that point, then I say, okay, let's above the psychological lows from the bull market of 2021. Now I think the low is in. But as of now, to me, this is a run-of-your-mill bear market rally. If you go back to 2018, 2019, we had periods where we were up 100 to 200% off of the lows in Bitcoin, and yet we still came down and retested that 3,500-ish low. So you can't get too excited yet when the technical level that is the huge wall in Bitcoin hasn't been broken yet. So I'm sticking with 12 to 13,000 and maybe as low as 9,000.
Gareth Soloway is a well-known expert in macroeconomic analysis, technical chart analysis, and providing trade signal alerts. He believes that recent bank runs have boosted cryptocurrencies such as Bitcoin and precious metals like gold as viable alternatives to traditional banking systems. However, Soloway notes that fear and emotion still play a significant role in market volatility. He asserts that for Bitcoin to establish itself above the key psychological support level from the 2021 bull market, it must surpass $30,000 and remain at that level for at least a week. Only then will Soloway consider the possibility that the market has bottomed out. According to Gareth Soloway, the recent surge in Bitcoin's price is merely a typical rally within a bear market. He remains uncertain about whether the bull market is back on track as Bitcoin continues to struggle with breaking through the $30,000 level, which he describes as a line in the sand. Soloway speculates that Bitcoin may drop to $12,000, $13,000 before any significant rally, and he sees this possibility as a looming threat to the leading decentralized finance asset. Before proceeding further in this video, make sure to click on the subscribe button below to stay updated with our latest content.
Normally we see risk on being something that drives Bitcoin up, but over the last month with the banking crisis, we've actually seen risk off be a positive for Bitcoin. So this kind of a weird thing where Bitcoin, people aren't sure, wait, which one is it? Is it a risk on asset or risk off asset? And right now the price action is telling us it doesn't know, right? I mean, we're even seeing the banks selling off a little bit today, and that's not even driving Bitcoin to the upside. So the biggest thing to do here is look at the chart, and I think the chart really tells us a lot about where Bitcoin is relative to where it could go. So if I zoom out on my chart here, and this is amazing, we're going back to the levels that were the lows during the bull market, and that's where Bitcoin is hovering just underneath. And so if you think about it on a psychological basis, this is like the Great Wall of China. I mean, this is the epic wall of Bitcoin's price action. And so that explains a lot why it's having so much trouble breaking above this $30,000 level. So for me, when I look at this, I stay bearish or a suspect in terms of whether or not the bull market is back on in Bitcoin. I'm still favoring the fact that we're still in a bear market in Bitcoin until we get over 30,000 and hold above it. Because right now, this is the line in the sand. And if Bitcoin can't get through this, it's still bear market central.
Trading expert Gareth Soloway warns that panic can cause people to sell without asking questions, and he believes that a period of panic similar to that seen at the beginning of the COVID pandemic in March 2020 could happen again soon. However, due to the recent banking crisis, a risk-off mentality has been positive for the leading cryptocurrency, Bitcoin. Soloway suggests that if Bitcoin can maintain a price above $30,000 for a week or more, a market can anticipate a surge in prices from $35,000 to $40,000. Nevertheless, the future of Bitcoin remains uncertain, and retail investors must exercise caution and monitor Bitcoin's every move closely, as the cryptocurrency has experienced significant volatility in the past month.
For me, as soon as the banking crisis started, I said to myself, all right, this is exactly why Bitcoin was created. This is the essence of why we need Bitcoin. But again, in the shorter term, when you see panic, like when you go back to the COVID 2020 March period where things were in really a panic central, you saw even gold selling off because during panic, people don't ask questions. They sell, they ask those questions later. And I think that's what we're coming into. We're coming into a period in the equity markets where I think you're going to get a realization there's a recession. I know we'll talk the S&P in a little while, but you're going to get this sell-off in the stock market. My guess is it bleeds into crypto and it creates more selling in crypto to the down. Yeah, so if we get above 30,000, and I think this is key, is that a break above for a day or two, that doesn't matter to me. I've seen algorithms that'll do that purposely to stop people out or actually convince people that last little bit of FOMO to jump in on board. Think about the 65,000, which was the early 2021 high, and the 69,000 level where it convinced everyone we were headed to 100,000. But if we stay above there for a significant amount of time, a week or so, then likely that tells us that we are going to head even higher. Your next leg probably has the chance to take us up towards that 35, 40,000 level probably over the next month or so.
Soloway believes that if the S&P experiences significant losses, Bitcoin is likely to be affected as well. Soloway observed, if you look historically at Bitcoin, it has gone down when the stock market has gone down. If the S&P dumps as much as I think, Bitcoin will get caught up in that selling. According to trading expert Gareth Soloway, the 4,200 level presents a significant resistance barrier for the S&P 500, with the 3,900 level below serving as a major support level. This consolidation area may prove to be the largest overall, and long-term traders will continue to monitor it. However, recent weak economic data that was cheered by investors as a sign that the Fed's interest rate hikes were working and could ease up on its campaign to curb inflation has caused concern. Soloway believes that inflation persisting at around 3% is worrisome for the market. He predicts that the S&P 500 will likely fall between 3,000 and 3,300 possibly in the second half of 2023.
I think it's important to recognize that the S&P has really gone nowhere in a long period of time. That's actually not a good thing. When you have a big drop from the all-time highs and then you get into this consolidation pattern, what it tells you is there's an equal amount of buyers and sellers, and that's why price is chopping sideways, right? One seller equals one buyer. Problem is, we know the retail crowd continues to be buy the dippers. So why haven't we gone higher? The answer is smart money, big money, institutional money is likely selling into it. So ultimately, my guess is we have another leg down in the second half of the year. We retest and actually take out the October lows and probably head down towards that pre-COVID high here on the chart. So I do have a downside price target at minimum by year end of 3,300 and change. I do think worst case we could even touch 3,000. I think the second half is going to be, this is going to be the kicker for the second half, is it's going to be a point where investors finally realize that we are definitely going into a recession and that the Fed can't bail us out by cutting rates aggressively or printing money because inflation is so high. All right, in the past, in the last 10, 15 years, any sort of blip in the screen, case in point, 2018 in December, when markets dropped about 20% in 6 weeks, the Fed started cutting rates immediately. They could do that because inflation was sub 2%. They could do what they did in COVID because inflation was sub 2%. You can't do that with inflation up above 2% or 3%, as I think it's going to stick around. And that's going to be a realization that is scary for the market. It's like a child where the bumper sides get removed. You're now open to get hurt by the reality of the market, and that's going to be pretty scary for the markets. You're going to see a big sell-off when that realization happens.
Soloway claimed, "We've been waiting for gold to have its moment. It might soon be here based on the technical." Gold is expected to close the quarter and the month higher due to the possibility that the Fed might pause its rate hike campaign following the collapse of two U.S. regional banks. Although gold prices recently dipped as the dollar strengthened ahead of crucial U.S. inflation data that could impact the Federal Reserve's monetary policy direction, a clear and sustained upward trend could signal a significant bullish long-term breakout, potentially leading to a move up to $2,300.
I still have it priced in that gold is going a lot higher. The momentum trade hasn't even caught up to gold yet, so I think 2,300 by year end is a no-brainer, maybe even higher. But again, I do think that gold is following the playbook of the 1970s, the same chart pattern playing out. In fact, heck, I got to go back and show you guys here. Let's go back
that's
here.
Very interesting to me.
So this is, and I've talked about this for the last year, how this is what was going on, where you had the same, like 2018 to 2020 and change. That was this run up, which lasted from 1970 to 1975. Right. We then had this sideways pullback. Even when inflation was going up, you had this pullback in gold. All right, same thing happened over the last 2 years, from 2020 to 2023-ish, early 2023, and then look at what happened afterwards in the late 70s into the early 80s, this meteoric rise in gold. So I think that's the replication. If you look back historically, this is the only period in recent, semi-recent history we have to go off of, and it really tells us that gold could have its moment here. We've been waiting a long time for gold to have its moment. It might soon be here. Again, if a breakdown in the dollar comes, number one, that's going to continue to be very, very good for gold. In theory, it should be good for the stock market, but I would just caution people that there will be a point where a down dollar is actually not a good thing for the U.S. stock market. And that point will be when people know a recession is coming, right? So when we're in the midst of a recession or getting into one, a down dollar actually, in other words, bad news is going to be bad news. Up until now, news is good news because it means the Fed hikes less,
right.
But eventually bad news will be bad news. But the bottom line is a down dollar is very good for gold, and generally it's good for Bitcoin.
The Bitcoin price has been displaying positive signals lately, with many experts anticipating further stabilization and a continued relief rally throughout the month. One key reason behind this bullish outlook is the upcoming halving event for Bitcoin scheduled for 2024. While Gareth Soloway maintains a short-term bearish stance, he remains a long-term bull for Bitcoin. He predicts that the ongoing banking crisis and possible stock market sell-off may initially cause a decline in Bitcoin's value, but it will eventually recover and continue on its upward growth trajectory. That's all about today's analysis. Do you agree with Gareth Soloway's perspective about rising inflation, ongoing banking crisis, Bitcoin, and gold performance in the current situation? Share your thoughts in the comments section below. If you found this information helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.